Hello and welcome back to my channel. So if this is your first time here, you're welcome. On this platform, I share lessons on how to trade better. If you're new to trading, even if you're an intermediate or an advanced trader, you can always learn one or two things to help you improve your trading. So in this video, I'm going to be sharing tips on how to trade support and resistance. In the previous video I made, we talked about how to draw support and resistance, but now I want to look at how we can actually trade and make money off support and resistance areas. Remember, if you haven't watched the video yet, you can check the description for the link to access those videos. But if you have watched them, it's okay. Let's go right ahead into how to trade support and resistance. Okay, so remember I said that when price hits an area of resistance, it means that there are sellers in that zone and we're looking to sell that trade right back into support. And once price taps into an area of support, we expect that the buyers will push the price high into an area of resistance. So that's the summary of what support and resistance is basically all about. But now if you look at the chart, you can see that we have a lot of different candlestick patterns, different shapes and sizes. All of this represent human behavior because we can't see who's on the other side. We're not seeing them physically. So these candlestick patterns tell us about what is happening in the market, right? How people are reacting towards price at certain regions. So these are the things there are so many different types of candlestick patterns, but the one I'm going to be showing us today is a very simple one of them, just one of them, that we can actually use to trade off support areas and resistance areas. So when you see those kind of candlestick patterns, it will be easy for you to take a buy trade if it's at support or take a sell trade if it's at resistance. There are so many of them. We have the bullish engulfing, the bearish engulfing, morning star, evening star, the harami candle, quite a number of candlestick patterns, the doji, the tweezers. But today we're going to take it one step at a time, right? So today I'm going to be sharing with you the shooting star candlestick pattern, the pin bar candlestick pattern. They call it pin bar or shooting star. This is what we have right here. I've already drawn it so that it's easy for us to just go straight to what we have, so we don't really take too much time on this in this lesson. So this is it right here. So price has been trading. We've seen buyers push price gradually into a key area of resistance. And remember, what does resistance mean? It means that there are sellers in that zone that are likely to push price lower into a support area. So when price hits an area of resistance, because there are so many candlestick patterns and these candlestick patterns represent human behavior, this particular one here is a very good significant candlestick pattern that we could use as an indication that the sellers are actually ready to drop the price, because this here tells us that at the time this particular candlestick opened, at this point, this is the open price here, the buyers intended to continue pushing price higher. So they broke past this level of resistance, but then the sellers were like, no, you guys cannot continue to push price higher. We need to bring it lower. So they dropped price down, closed below the opening price of that particular candlestick pattern, and created this long wick here. So this wick here tells us that there was rejection of higher prices at this zone. So this is a very good key indicator of sellers' presence, and we can go ahead to take the trade for a sell. So this is an indication for sellers, for us to take a sell when price is at an area of resistance. Okay, so now price drops down gradually back into an area of support, and we see this particular candlestick pattern here. This also represents buying pressure. Remember that support is an area or a zone on the market where we're expecting that price would increase. Now this tells us very significantly that there are a lot of buyers here, because at the open of the candle of that day, depending on the time frame you're on, maybe daily, 4 hour, 2 hour, 1 hour, depending on the time frame. So the price opened at this region and closed right and dropped downward. Sellers intended to continue pushing price lower, but the buyers were stronger than the sellers. They pushed the price back, closing above the open price of this particular candlestick during that trading period, maybe the daily time frame or the 4 hour, like I already said. So this is a good indicator of the buyers present in this area of support, and we can take our trade for a buy, and we buy into this area of resistance. Okay, so this is one of them. There are so many of them, like I already said. This is one of them that you can go back test. Remember, you have to try this out first on your trading platform. Open your trading view, go through historical data, map out support and resistance levels, look out for this particular candlestick and find out how it played out in the market, right? Do your own homework, do your own research, do the work. It's very important. Don't just go ahead to start trading it live on your trading account if you have not understood it. Okay, so this is in summary how you can trade support and resistance. For this is very simple, straight to the point, and very beginner friendly, and it's something you can begin to practice immediately. Practice first of all, go through historical data. That's your assignment. That's the assignment I'm giving you. Remember to practice before we can start trading live. Now, this is a clear example of what I was talking about. This is it. So this is a very clear example. If we look below, you can see that price tapped into this level of support, and then we saw it tap again into this support, pushed higher. And if we look at this point, price tapped into this area of support. Can you see this? And look at, we have clearly this hammer candle. It's called hammer, the hammer candle, yes, or the bullish pin bar. Yeah, it looks like a hammer, right? Like hammers that people use around carpenters or so. Yeah, so this is a hammer candle. You can see how it's clearly sitting at this area of support. After the candlestick closed, we can see how strong, see the bullishness of the bulls. It was so strong that they pushed price way higher than where it even opened. You get, so this is how you can use this particular candlestick pattern to trade off support and resistance area. This is a live market. So this candle is currently looking like a resistance, a pin bar, yeah, but it hasn't closed yet. We need to be sure of how it closed. The candlestick has to completely close before you can decide, okay, if it's ready, because as it is now, it's still moving. It's possible that the buyers will still push it and close around this point. So you need to be patient for that candlestick to close before you go ahead to decide to take a trade on it, either for a buy or for a sell. Let us check other platforms to see. Let's go through. Let's go through it. Let me show you two more before we call it a day. Great. This is a very good one for resistance. You can see how price tapped into this level of resistance in the past. It tapped here and dropped price lower. And you can see how it tapped into this level of resistance again. And look at the selling pressure. It was so strong that they were able to create this pattern here, telling us that there are sellers here and they are not ready to increase prices. Instead, they're ready to push price back into that level of support. So this is a very key indicator of when to sell and when to buy using support and resistance. But remember, like I said, this is just one of them. There are other different ones, that different candlestick patterns that you can look out for, because you're not always going to see this one. So what if you don't see it? What is going to happen? You're just going to have to keep calm and wait until it appears. So that's why you need to also learn the other ones that you can also use to trade off support and resistance areas. But go and try out this one. Look out for this one. Try it out. Let me see how it worked for you, and then let me know in the comment section if you tried it out, what you got, and how you've been able to use it to trade. Right? Remember, you have to test it out first on your demo account before you go live. So this is the whole pattern in a nutshell. I don't want to make this video too long. I just want to also go straight to the point. This is a very good one. Again, I can already see this. So this is how you want to go and back test on your own chart. this is a very key level of resistance, and look at price dropped very nicely, creating this hammer, this pin bar, rather shooting star candle at an area of resistance, and then price dropped immediately back to the support area. Good. So how do you then take your profits once price has started moving in your direction? Now this is what you should do. If you're selling after you have seen your candlestick formation at this area of resistance, you take a sell trade, and your stop loss should be, where is it now? Your stop loss, it varies. Yeah, your stop loss varies depending on your risk. You can put this, do this. This is the, all right. So there are two ways you can use your stop loss. You can either measure 50% of the week and put your stop loss at the 50% level of that week that was created. Or if you want to be more conservative, you raise it above, slightly above the week of that candlestick pattern formation, and then you target the next support region as your TP area. It should give you, for something like this, about 1 to 2 risk to reward ratio. But this is a daily time frame, so you don't want to, so that your stop loss is not so wide. You can use it on other time frames that you trade on. Yeah, so this is also the same thing you can do for the support. This is what we have here. So you can use this on the 4-hour time frame. You can also use it on, yes, on the 4-hour time frame. Yeah, use it on the 4-hour time frame. So when the candlestick closes, this is what you have. If you're going to be very conservative, but if you want to be a lot more aggressive and you don't want your stop loss to be much, you can use 50% of the week to to measure your stop loss and target the next resistance for your take profit, so that the price doesn't hit your target and then starts to reverse. Okay, so this is for this particular strategy. This is just it in a nutshell. Yeah. Let me know if you have questions in the comment section, and yes, just let me know if you have any other, if you understood what I said here, what I explained here. Let me know if you have questions, and I'll be glad to answer your questions. All right, so thank you for watching. Remember to subscribe, like the video, and also share this with your trader friends who are beginning to learn how to trade. All right, so I'll see you in the next video. Bye for now.